one of them is that there will be a new Cold War. I don't want that. I don't seek that at all. But that would involve almost a complete decoupling commercially, and it would be amazingly disruptive. It would be amazingly disruptive. It would be a kind of a commercial equivalent, an international commerce equivalent of the Berlin Wall coming down and the Berlin airlift, which was pretty hairy at the time. Except this would be in commerce, and it would place lots of non-aligned states in an incredibly awkward position.
On today's episode of the WTFinance podcast, I have the pleasure of welcoming Sir Paul Tucker. Paul spent more than 3 decades in central banking, culminating in being the Deputy Governor of the Bank of England. And he's also the author of the recently released book, Global Discord, Values and Power in a Fractured World Order. So, Paul, thank you so much for joining the podcast today.
It's great to be here. Thanks very much for having me.
No problem. And yeah, I really look forward to talking about this because I guess it's probably it's a topic that's being talked about quite a lot with some news that we've been seeing recently. But I guess from your perspective, what was the influence for writing the book?
Well, when I started writing the book in about 2018, and at the time, not many people were talking about the rise of China and what it would mean for the West. And I was surprised by that because I had thought for at least 10 years before that, so 15 years ago, if you like, that the rise of China was going to be a major challenge to the West and would affect global commerce and finance and trade in major ways. By the time the book came out, people had started to realize that. But so what the book tries to do is set out a way of thinking about what it is we really need to stand behind, what it is we should care about, because I don't think there's any script that the leaders in Washington and elsewhere can follow. Instead, I think they have to know what they really care about, and that's what the book attempts to do. But I think it will dislocate business, I think it is likely to dislocate business. And I think that very few people in business are prepared for that. And we saw that the other day. I don't want to be too tough on him when the leader of Mercedes said that cutting back or cutting ties with China is unthinkable.
Yeah, and it's crazy to think. So I guess if we go to, as you said, you talked about the rise of China and, the potential massive shift that could have on the global order. So can you maybe give us a quick explanation of what the previous global order has been and then how that could change if China were to, bifurcate that?
I think there are 3 big picture things to say. One is we have lived in a kind of an American design world in a way since 1945. But before that, we kind of largely lived commercially. I mean, we largely lived in a British designed world before that. And so, although I think the Anglo-Saxon thing can be overdone, there's also something to it, and we need to be kind of realistic about that. But the key thing after the Second World War, when the US became the major free world power, is that Stalin walked the Soviet bloc out of the IMF, the World Bank, and pretty well the trade regime. And that wasn't inevitable. The Soviet Union participated in the so-called Bretton Woods discussions on the IMF and the new world. In fact, in that big hotel in the White Mountains where those talks took place, I have once been allocated the Soviet delegation room. I think it was directly above the one that Maynard Keynes used. Anyway, Stalin walked them out, even though they negotiated, were part of the negotiations, they walked out of it. And that meant that although the US and the Soviet Union were facing off against each other in foreign policy and security policy with proxy wars, horrible proxy wars all over the place, commerce became a free world thing. 2 bifurcated economic blocks, a small tube in between, oil going in one direction, dollars in the other. And so global commerce was kind of designed a bit in our image. And then the Cold War came to an end at the end of the 80s, beginning of the 90s. And there was this kind of flurry of international agreements and regimes and new organizations, all of which bear the stamp of the United States and Europe, and to some extent Japan and South Korea. And China wasn't kind of part of the design team or the architectural team. And it would be surprising if a new rising state didn't want to make changes. As it happens, the new rising state has a society and an economy based on completely different principles. And so they may really not like parts of the world that they find themselves in very much at all. And so they not only represent a security challenge to the West, broadly defined, where bizarrely the West includes the East. It includes Australia, New Zealand, Japan, South Korea, and plenty of others. But also, as well as those security issues, they are likely to want to overhaul many of the international economic regimes and organizations if they can, including most prosaically wanting to promote the renminbi as a rival reserve currency, and including wanting a greater place for subsidies in international trade, which has gone down like a lead balloon over the past kind of 15 years.
Yeah, so that's a lot of things to think about. So I guess if we look back 10 years ago, you said that this was something that was on your radar, and it's sort of been something that you've been looking at for quite a while. Why was it on your radar? Was it sort of actions that have been taken, or?
That's a very good question. It's a kind of personal question in a sense. I lived in Hong Kong in the late 1980s and was very conscious of East Asia, the significance of East Asia. Shortly after I came home from Hong Kong, Tiananmen Square happened. That made a big impression. For me, the biggest event in 1989 was not the fall of the Berlin Wall. It was what happened in Tiananmen Square and the lengths that the party would go to hold on to its power, which they're not the first group of elite rulers in history to be like that, but that is what they were like. And I thought that kind of weighed with me heavily. And then I thought in the early 90s, when the China was admitted into the WTO, the World Trade Organization, I was surprised that Western capitals were putting pretty much all our chips on the political liberalization of China.
And why do you think they did that? Were they just naive? As we saw economic liberalization sort of late 80s, early 90s in China. Do you think they were just naive, that they thought that once this occurred, then the rest of society would follow? Or why do you think they sort of put that? I guess they thought that it would evolve to that point.
I think yes, a bit naive actually, or overly optimistic. I didn't think it was crazy, and I don't think it was crazy to think that economic liberalization could lead to political liberalization. I didn't put a very high probability on that myself, but I thought it was perfectly reasonable that other people should put a higher probability on it than me. I do think that what people used to call commercial society, trade, exchange, in slow motion promotes political liberalism and convergence of politics. But I think it's in super slow motion. After all, in the run-up to the First World War, the German economy and the British economy, and especially German and British commerce, were incredibly intertwined. I mean, the German presence in the city of London was enormous and caused real heartache and some tensions in the city of London when the First World War broke out, and yet there nevertheless was war. So I did think it was imprudent for the West to put all its chips on that. By the same token, although I'm in favor of some decoupling so as to reduce overdependence on each other in case there's a conflict, and I think that's symmetric, by the way. I think China has interest in doing that, and we have interest in doing that. And in a sense, it ought to be possible to do that in a fairly orderly way. But it certainly risks becoming disorderly and overshooting. And, we can't rule out that this would descend into 1930s protectionism. And that would be dire. It would be dire for the global economy, and it would be dire probably for security. So the course I want to pursue is one that requires great care and deftness and judgment on the part of leaders on both sides. Going back to, if you like, my criticism of naivety, I mean, I'm not pretending it was easy. I mean, for example, around the time that China joined the WTO, during the Balkans War, the Americans had accidentally dropped a bomb on the Chinese embassy in Belgrade. I mean, that's the kind of thing which makes everything else more difficult. But in my view, that wasn't sufficient justification for not addressing the question of subsidies in the entry agreement for Beijing. And even before that, the WTO treaty itself gives everybody a veto. And by doing that, to any change in the core treaty, and that effectively makes the appellate court judges the equivalent of a kind of constitutional court for the WTO, which means the rulers. And they've taken decisions on subsidies which no one would ever expected, and no one knows really what to do about. And the American response to these judgments has been to basically veto more appointments to the appellate court. And listeners will think, that will have been a Donald Trump thing. No, it started under Obama. So even this sense of bipartisan concern about China, which people tend to paint as quite new in Washington, in some respects, it's been going on since the Obama-Trump transition. Trump was more forthright about it. And I'm not sure that was a bad thing at all, because it crystallized views. But the Obama administration were plainly concerned about their predecessors having agreed to rules of the game that just didn't contemplate the rise of a state that wasn't like us. And I think that wasn't just naive in a way, it was conceited. Why on earth shouldn't states that aren't like us rise? And we shouldn't try to keep them down, but we should try to design world regimes that aren't brittle when that happens, whilst also, if you like, defending or promoting our own interests and our view of how international commerce should be conducted. So the stakes are high. In a sense, I never quite say this in the book, but we're entering a period where we need bigger leaders than we've needed for half a century or more. And we've probably been in a period where we've had smaller leaders than for a quarter of a century. Great.
That doesn't sound like a good combination. So I was listening to another interview that you did recently, and you talked about something called Document 9 of the Chinese Communist Party. And I think that's probably a good way to maybe explain how China is different to, I guess, countries that some of us are more familiar with. So maybe can you talk a bit more about that?
Well, thank you very much for asking me about this. I'm lucky. I get opportunities to talk about this book, and often physically with sizable audiences, sometimes small audiences, of course. And when I get to Document 9, I ask how many people have heard of it. And I would say about 1% of the physical audiences I've talked to, many now, and so 1 in 100 people with very tiny variants around that, very tiny. So hardly anyone has heard of it. And I hadn't heard of it until I was working on this book. It was released, it was kind of leaked in a way, quite under what circumstances, I don't know, from the Central Committee in Beijing in 2013. And it sets out the 7 no's. And 5 of the 7 no's are basically a catechism of things in Western political values to oppose. So I'm not quoting now, but in broad paraphrase, no to constitutional democracy, no to journalism with a free press, no to universal values, universal over time and over space, more importantly, no to certain kinds of civil rights. I mean, it's basically, I mean, it's very well drafted. You know, I was a public servant staffer for 20 years before I was a policymaker for a dozen years. It's very well done. And it's absolutely clear. And what it's saying to members of the party and to organizations in China is you shall not promote any of these values. And before it came out, for some years, there had been debates in China. It's kind of Chinese glasnost in a way about, well, should we be becoming more politically liberal? Going back to your previous question. And this document says, not only should we not be becoming politically liberal, actually, you're not to be promoting these ideas. So this is quite an ideological statement. And I think it makes clear that the quotes Western Chinese contest is ideological. I mean, and let me say also that this is a contest which is in everything, unlike the Cold War. It's everywhere, like the Cold War. It's ideological, a bit like France and Britain in the 18th century. And neither side can really knock out the other, assuming, you know, they don't resort to annihilating the world. And so it could go on for a very long time. I think it could go on for many decades, certainly half a century, conceivably a century. And one of the messages I try to get across to potential business readers of the book is this is something you've just got to get your head around, that we are now in a different phase of the world. So when the Mercedes leader says that decoupling from China or cutting ties from China is unthinkable, well, does that mean that he thinks that cutting ties with the US and Europe is thinkable? I doubt he thinks that. And so does it mean, well, but it can't mean it's unthinkable in the sense that I really don't want to think about it, because there is some, God help us, there is some non-zero probability of conflict or escalation of trade war where he or his successors will be forced to choose, or a choice will be imposed upon him. In the Second World, before the Second World War, there was a company called Merck. Since the Second World War, there are two companies called Merck, one in the US, one in Germany. That's because they were split in the Second World War. I'm not applauding any of this, and I certainly, I don't say bring it on or anything crazy like that. My experience of business people, certainly including people in finance, and actually of public officials, including very top public officials, is that they handle things better if they've thought about them before. And so what I don't want the leader of Mercedes to mean is it's unthinkable and therefore I'm not going to think about it.
Yeah, I think we saw recently, I guess, with Russia, Ukraine, that I'm sure that's something that lots of individuals thought was unthinkable as well, that the schism that we've seen. But if push comes to shove and you're forced to do it, then, you know, it has to happen.
Yeah, my response to that, when people asked me afterwards, were you surprised that Russia's central bank reserves were frozen? And my response was, oh, I thought, oh, that's interesting. That's where the threshold is. I mean, someone like me has known, I don't know, God knows how many years, how many decades, frankly, that central bank reserves could be frozen and have been frozen before. But we discovered where the threshold was. I was taken a bit by surprise by Putin's actions, not from the beginning of the year, but I had thought that Putin would make his move against Eastern Europe, against Ukraine, only if and when she or she's successors made a move against Taiwan. I'm not predicting a move against Taiwan, but I thought if ever that happens, we'll probably see Russia move against Eastern Europe, because that will stretch the United States on two fronts. Whereas I think one of the many effects of the war on Ukraine is that the United States now knows that it can be stretched on at least two fronts, and is preparing accordingly. And that's, in some horrible sense, that's a good thing. It's a horrible sense because the Ukraine people are dying while we speak, and fighting extraordinary.
Yeah, may make China second guess trying to take Taiwan. But maybe if we take a step back, because as we said, we're talking about sort of those large international organizations like the WTO, and you were sort of saying that how brittle they are. So maybe you can give us some examples of why they're brittle, and then from there we can link it all together and say why China's, or maybe why other countries are looking to change these global organizations.
So, but the best example is the WTO of being brittle. So you've got something, I've touched on this already. When the previous GATT agreement became a much more ambitious WTO, and many more countries participated, everybody signed up to everything. You couldn't select. And the quid pro quo for that was that everyone gets a veto over future change. And this too, I think, is slightly crazy, I'm afraid, in that you're proceeding as though you've written the perfect agreement. And there's no such thing, because all sorts of things will happen that couldn't have been anticipated. No one was thinking of AI when they drafted that agreement, and who knows what AI will do to trade. And then there'll be something beyond AI. I don't know, maybe something to do with quantum computing, and you get to worlds that you can't possibly imagine. So you need to be able to amend treaties without completely abandoning them. And giving everybody a veto is a tough thing to do. But if you don't give everybody a veto, you have weighted voting. And if you have weighted voting, then you're saying some countries are more important than others. And my response to that is basically to say, well, in terms of maintaining peaceful coexistence and keeping the sea lanes open, that's true, even though it's not a nice truth. So something like the WTO has been brittle. I think the great challenge now is how far the world will fracture. And in a sense, the challenge for people like me is that we want just the right amount of fracturing. To kind of be tough on myself, we want to reduce overdependence and in vulnerable areas, and areas that really matter to our way of life. I don't want, short of that, I don't want to stop Mercedes selling cars in China. That would be crazy. Crazy is not the same thing as unthinkable. And it wouldn't be crazy in all circumstances if there was conflict. Then there might have to be a choice. And so it's, how do you navigate around that? It worries me that at the moment, whereas the Soviets and subsequently the Russians and Washington had de-escalation procedures, de-escalation protocols in the security field, Beijing and Washington apparently do not. And Beijing has declined to engage in that. And that's a source of fragility or vulnerability as well, because it makes it more likely that if the wingtips of a Chinese plane and an American plane touch, and it may be the American pilot's fault, that at the margin, there's a greater risk of that escalating than in the old Cold War, and that should bother everybody, including the Chinese.
And what would that look like? Because I guess you've mentioned Germany and UK back in the early 1900s. There was a split there during the war. After the Soviet Union, the Cold War, there was a split, but really the economies weren't too intertwined. If we look at, I guess, China, the US, and basically the whole world today, and Europe, that they're all extremely intertwined. And if there were this bifurcation, you can imagine it would have massive consequences on basically all of our lives. So what would that look like? And I guess what are the options? I know in the book you actually mentioned a few different options of where things could go. So maybe, yeah.
So one of them is that there will be a new Cold War. I don't want that. I don't seek that at all. But that would involve almost a complete decoupling commercially and it would be amazingly disruptive. It would be amazingly disruptive. It would be a kind of a commercial equivalent, an international commerce equivalent of the Berlin Wall coming down and the Berlin airlift, which was pretty hairy at the time, except this would be in commerce, and it would place lots of non-aligned states in an incredibly awkward position. But that is a possibility. That has to be a possibility. I think we're more likely to live with a kind of superpower struggle that is in everything, but where except in one area, where in the monetary sphere, where the dollar lingers on for quite a long time as the premier world reserve currency. And that's because the network effects all push that way. I mean, you and I, we're recording this, both of us are in the UK. If we go out afterwards and buy something in a shop, we'll get served if we offer sterling. We're not going to get served if we offer dollars or euros, good currencies though they are. And that's because everybody's set up to trade in sterling in the particular land that you and I are sitting in. Well, if you take that internationally, the default commercial currency is the dollar, and it's very difficult to change that because of the network effects. But it's not impossible. I think there's a line of argument that says the renminbi can't become an international reserve currency because of lack of rule of law, because of incomplete currency convertibility. These are really good arguments. But the relevant question is, does that mean it's a 0%? No chance at all? But the answer to that, no, there is some chance. If Saudi and others invoice oil in renminbi, and the Chinese pay in renminbi, and then Saudi Arabia and others have renminbi to invest, and China encourages, or perhaps doesn't even need to encourage, some third-party states and companies to issue renminbi securities, you could get an offshore renminbi market. Chinese would face the challenge of equilibrating the value of the offshore renminbi and the onshore renminbi. And that's not the easiest thing in the world, but it's not beyond their capacity. So it's not likely that the renminbi will challenge the dollar in a major way, but nor is it, it's certainly not impossible. And so even in the area where US has the most secure incumbency, China will be able to challenge, and I'm sure will try. And so there will be, in almost every field, every international organization, every part of commerce, we will be in a superpower struggle. And I don't think that will really change until either, God help us, there's a decisive conflict, or one of the two superpowers unravels internally. Don't want that to happen to either. Or a third superpower rises, which is most likely India, not round the corner, but within the next 25 years, that's possible. If they grew at a pretty quick pace in a sustained way for a couple of decades, they'd be massive. And then the world becomes, then I think you can see a different kind of world order emerging, where it's a bit more complicated than a standoff between China and the United States and its European and Australasian and East Asian friends.
And then would I guess the best case scenario be what you've mentioned before, where there's sort of a small decoupling, not too much, as you said, everyone's hedging their bets, but it doesn't get to the point where there's this massive split.
Yes, that's absolutely the case. And then certainly for commerce, and therefore for the livelihoods of people around the world. And then I think in that world, what would matter for us, if you like, are that Washington and the other major, quote, Western capitals do a better job of maintaining friendships with other states around the world. I don't think Washington's always been very good at that. And being good at it requires being consistent. not flying into Africa just now, but doing it persistently, so that it's understood by everybody to be a relationship that's going to be there in 20 years' time, and people feel completely confident that it will be there in 20 years' time. I mean, in a sense, that part of foreign policy isn't very different from selling bonds. You have to kind of, take people seriously and build relationships in the private sector. I mean, the other thing is not making mistakes. So I think some of the debates about containing China are slightly wild. I think we do better, and they do better, to think about not making mistakes. So something I say in the book is the West can't afford another financial crisis. Well, the West has had a pretty good try at another financial crisis recently, and for absolutely no good reason, because there wasn't anything novel happening. This isn't like 2007. And then the debt ceiling debate is even more obvious in Washington at the moment. A kind of very familiar, hard-knuckled contest fought within the Beltway, except now it plays into geopolitics. And my slogan has tended to be, vote default, vote Beijing. And it isn't obvious to me that the actors in Washington have really grasped that even a technical default would be, in a game of snakes and ladders, geopolitically, that's a snake. Because if they technically default, I can almost see the PowerPoint presentation saying, well, you should just shade down the proportion of your reserves that go into dollars.
Yeah, definitely accelerate that, I'd say. So that's an interesting point. As you said, there's a lot happening in the US, lots of banks collapsing. And we've seen some quite interesting, I guess, actions by central banks. And you could say in the UK as well, sort of late last year, we saw with the pension concerns, we saw some interesting actions as well. So I guess from your perspective, how have you seen central banks evolve over the past few decades? And then do you feel like there's this they're pushing the mandate to the point where they're doing whatever they can to prevent that financial crisis, as you were saying then?
So 2 or 3 thoughts. So I think that those of us that were involved in innovations in 2009 onwards didn't think they would be needed for so long. And I think, easy to say this, of course, but I think we would have been uneasy by the middle of the teens. We saw QE as a kind of temporary expedient. I think by the middle of the teens, many of that generation of central bankers would have wanted more fiscal support, less monetary support. That would have led to an upward sloping yield curve, slightly less inflated asset values, less search for yield, less vulnerability in the banking sector. That's the first thing. Over the last 10 years, and as it happens, I left office just under 10 years ago. I was surprised that when COVID broke out, that I wasn't surprised that they stabilized bond markets in March, April 2020. I was surprised, and I think I'm on the record at the time as saying I was surprised that they continued to add to quantitative easing, even while the economy was shut down, and even while fiscal support was being provided to people as it needed to be. It wasn't, for the economic technocrats listening, it wasn't obvious to me that it was necessary to stimulate aggregate demand when aggregate supply was being closed down voluntarily or by government fiat. And I thought forward guidance kind of went on for too long, in that it moved from being a commitment when they were stuck at the zero lower bound. I was never in love with that, but I see the point of it. It moved from being that, as they got away from the lower bound, it was no longer a commitment, it was a prediction, where you don't know what's going to happen in the world. So it's a kind of pretty risky prediction. So you say, I'm going to do this. Oh, I think I might do this, but actually the range of uncertainty around it is enormous, and therefore really there's not much probability of my doing what I've just said I'm predicted I will do. It's so I wasn't in love with that either. All of these thoughts, of course, are easy to have when you're out of office. And when it comes to the banks, I mean, there's a different story for the US and Switzerland. For the US, they decided in 2019 to stop planning for how they would handle the resolution of failed large regional banks. So they stopped planning for that, even though they knew they hadn't got a plan. So it's the report that's come out of the Fed in the last few days doesn't say anything about that, but that's the biggest thing. So the Fed's report says lots of other sensible things, but it doesn't say the thing that most needs saying, which is that all banking, and why is that? All banking policy should official banking policy should work backwards from the possibility of failure, because otherwise there is no great burning need to regulate banks, were it not for the disorderliness of their failure. So the key issue with banking is how you handle failure. And I think the Fed report is good, but doesn't get top marks because it doesn't address that issue, even though the Federal Reserve was a party to deciding to suspend that planning in 2019. I say this because in 2019, I was still the chair of something called the Systemic Risk Council, and we sent them a letter. This is Paul Volcker, Sheila Bair, Adair Turner, Nout Velling. I mean, a kind of roll call of Jean-Claude Trichet. I mean, really pretty big, too massive and otherwise pretty big figures saying, don't do this, please, don't do this. And they went ahead and did it. I think the Swiss case is much more intriguing, because my own view is that so far the public explanations offered by the Swiss for why they did what they did don't work as explanations. I mean, if Credit Suisse was comfortably solvent, and if it had plenty of unencumbered good collateral, then why not put it into resolution? But it has the problems that it had. Put it into resolution, write off the equity, write off the AT1 stuff, write off some of the other debt instruments as well, and then sell to UBS for a higher price. And then on Monday morning, SMB would unquestionably have needed to lend to this resolved Credit Suisse. But that's okay if it's comfortably solvent, even more comfortably solvent after resolution, and if you've got good collateral. And so, I mean, I don't know. I really don't know what happened. I mean, it seems to me that either SMB refused to lend, or SMB couldn't lend because there was insufficient free collateral, because maybe all the collateral was being used to support the capital markets business by then, or maybe they needed dollars and the US declined to let them draw on a swap line. And the reason this matters is that the policy conclusions that you reach from this, which I will spare you, but the policy conclusions you reach from this depends upon whether the SMB were stubborn and awkward, whether FINMA were unprepared for doing a resolution, or whether neither of those were true. They were both ready, but actually there wasn't enough collateral, or they couldn't access dollars. And the reforms you want depend enormously on which one of those four possibilities comes closest to the truth. And maybe there are other possibilities as well. And I really don't know. And I've been very surprised that there's not more public debate about this, because, and I want to pass over this fairly lightly, by rejecting the resolution route, the Swiss authorities have put in question, well, what happens if one day UBS is in trouble? God help us. So I think that's a lot more difficult to reach policy conclusions from than the US episodes, where there were good policies to both avoid and to handle the situation the US found themselves in, and they chose not to adopt to implement their own policies effectively.
Yeah, and one thought I've had is that, say, if we've seen, as you said, Credit Suisse was acquired by UBS and some of the American banks, JP Morgan and others. If it were to happen to say Germany with Deutsche, is there a bank big enough to acquire? And that's my thought. It's like, is there?
Well, the whole basis of the resolution planning thing, in which, of course, in a sense, I should declare an interest because I chaired the Financial Stability Board group on that, is when one of these super SIFI things, systemically important financial institution, fails, you just can't rely on there being a private buyer, and you can't rely on being able to break the bank up in the way that the FDIC is so expert at for small banks, and over the weekend has managed to do for a medium-sized bank, but I haven't looked at the terms of that yet. And so the idea was, well, instead, we need them to issue bonds that can be converted into equity. And I still think that is the best plan for these large banks. And actually, I think it's the best plan for many medium-sized banks. To the UK's credit, this is after I left the Bank of England, the UK has applied that policy, I believe, to their medium-sized banks. And well, that's sensible. And actually, in this policy area, common sense is quite useful. So, in a sense, the US abandoned common sense, and when they decided to give up planning for how to handle the failure of regional banks, which, as it happened, became bigger in the meantime. I'm not excusing the supervisors or the boards or the directors. I mean, but in banking policy, you has to be based on the thought that people will sometimes make big mistakes, and what are you going to do when they do? How are you going to contain the mess? And it's not that you can say, "Oh, it'll all be fine. I'll make the mess go away." It's how you contain the mess.
Yeah, which is very important. So I guess if we go to where we are in the UK, the Bank of England, they've had some challenges recently with some statements they've made. But I feel like this is maybe a trend that's for all central banks around the world, where there's this concern of a lack of trust in the central banks, what they're saying, a lack of they're losing this authority because of maybe that they got things wrong in the past couple of years in terms of inflation, what was happening there. And there's maybe this disconnect between, I guess, the general public and the central banks. So can you maybe talk more about that? And I guess, do you think there's a way that they could get that back?
I mean, I don't think the Bank of England's unique in this. I mean, I do think it's important to underline that there is a very, very important distinction between saying aggregate incomes are going to be lower, the country as a whole is worse off as an energy importing country because of the rise in energy prices. That's a truth which Mervyn King and other people said very publicly in the UK when energy prices first went up, saying that, and everyone will be worse off. I'm not actually sure exactly the words they were used, but they were reported as everyone poorer. That's not a truth at all, because actually just saying everyone poorer, some people aren't. The first point is about incomes, and some people aren't poorer because their wealth has gone up. So and then secondly, even just concentrating on incomes, aggregate incomes are going to be lower than otherwise. Real spending power in the economy as a whole is going to be lower than otherwise, because we import this essential thing that costs more. And then the big question, which is nothing to do with central banking, except in one respect, is, well, what's the distribution of the pain going to be? And you can, at a high level of abstraction, you could say, well, the distribution of the pain will be determined entirely by the market. Or you could say it'll be determined entirely by government. And then in between is merely, well, do you accommodate the rise in inflation? The rise in the price level, because it should be just a rise in the price level, not a permanent rise in the rate of inflation. Do you allow that? Do you accommodate it, as monetary policy people would put it? Or do you do the opposite? Do you suppress it, which means generating a very big recession? Back in 2022, last year. But then people will lose their jobs and they're poorer through that. So the mechanisms, there's one big choice for the central bank, but then there's a big choice, much bigger and richer set of choices to governments, not just the British government, governments in other countries as well, about what to do about the distribution of the pain. And the strikes are about that, insofar as in the private sector, what happens is that businesses put their prices up, and workers want their wages to go up, and that kind of moves in tandem, more or less, with profit margins staying more or less as they are. Not everywhere, of course, there's some gouging as well. But in the public sector, the public sector service providers can't so easily raise prices, and yet workers still want not to be made much poorer by the rise in inflation. And so you get this standoff between labor and government. And all of that was kind of entrained from the moment energy prices went up. And so to pull it back to the statement that was made, I think that's what the policymaker from the Bank of England was trying to say. It's not unique to the Bank of England that there have been communication stumbles from the Fed, from the ECB, among others, from the RBA over the past few years. At one level, I just think they need to redouble their internal efforts, rehearsals. If I think back to when I was in central banking, my God, the rehearsals of Mervyn King were so exacting. What if they ask this? What if they say that? I mean, that's kind of, I don't know whether they still do that. I mean, in all the central banks, but my goodness, you need to do that. It's not like me talking to you now. But more generally, I think an interesting thought implicit in your question is whether financial markets and maybe others have become more sensitive to these communication slips. And of course, I don't know the answer, but I think the answer may be that markets have become more sensitive, and that will be because markets have lived with very low interest rates and very accommodative policy for a long time. And there's a generation who understandably, in some senses, aren't very used to volatility. And these communication mishaps create volatility. But that shows the costs of relying on monetary stimulus so much and less on fiscal stimulus half a decade or more ago. And then finally, there is the problem that the main central banks were all slow they were not preemptive in heading off inflation. And I think they're starting to give speeches saying that this criticism isn't true, but I haven't heard any arguments so far that will shift me from that point of view. In the UK, this manifests itself in different ways in different countries. In the United States, there was a massive fiscal stimulus in 2021, and there was a debate in 2021 about whether it should have happened. I think that's the wrong way of thinking about it. The best way of thinking about it is it's quite up, if elected people want to have a massive fiscal stimulus, that's up to them. They stand for election. But if the central bank thinks that that will lead to an overheated economy, then they should be tightening monetary policy and actually even have tight monetary policy. Whereas in fact, they carried on having stimulative monetary policy, and they carried on adding to the stimulus at the same pace. And that was really strange. It was as though we've got this we're going to add to monetary policy according to this path. Now there's a fiscal stimulus and we're just going to carry on as though nothing's happened. That is hard to defend. In the UK, it's slightly different. After COVID, a lot of people left the workforce. This is familiar now, but actually some people were talking about it, I mean, quite some while ago. Maybe, I mean, in rough numbers, and someone like me can talk in rough numbers, the policymaker couldn't, maybe 500,000 people. That's a lot for the UK. Maybe half of those are long COVID of various kinds, which is just, ghastly. And other people, because people my age in a way, that expected to retire in a few years and because of lockdown were working at home or working a bit from home and thought, well, actually, this is fine. I may as well retire now. But the effect of that is to reduce the productive capacity of the economy. And if you reduce the productive capacity of the economy, the job of central bankers is to bring the path of aggregate demand, spending in the economy, down onto that lower path. And if you don't do that, particularly in the context of the price level shock, you're accommodating too much. And you start to get the risk of second round effects. Now, who knows how this will play out in the US, the UK, or the Euro area, and many other countries in the world, including Australia. But we're perhaps not quite at the point that we might have been. And I think that your question was about communications, and the most awkward thing for them here isn't that it looks as though they've made mistakes of substance on which we might all have changed our mind by even the end of this year. But they kind of shrugged it off as, oh, inflation's transitory. And that was a really big mistake, in which I think it's most unlikely people will change their minds, because a central bank should never sound casual about inflation. Never, ever. And in a sense, the more time they spend on climate change or inequality, or in America, what's called inclusive growth, the less time they give themselves to think about their core business. And I think climate change and inequality may be more important than monetary stability, but we elect governments for that. And the only people that are going to deliver price stability for us are the central bankers. So, yeah, I think there are some, if you like, in the dreadful language of consultants, there are some lessons, but I think they'll learn them. These are great learning organizations. They shouldn't indulge in that kind of consultancy way of speaking, but they will take from it what they need to. And I just hope they get inflation back in line with their targets pretty soon. And I hope they start being tougher on the banking system and on the shadow banking system.
So I know it's been quite a long interview, but I'm really interested to hear why you think they need to be tougher on the shadow banking industry.
Because this is. I mean, I was part of the generation, part of the core team really in the Financial Stability Board that were architects of the reforms, and they concentrated on the banks. But we were very clear: if we re-regulate the banks in this way, then banking-like activities and banking-like fragilities, meaning leverage and illiquidity and everything else, will move out of banking de jure into other kinds of entities that will look a bit like banks, and some of them will look a lot like banks, but won't be banks and won't be subject to these constraints. And some of them will therefore inevitably fail. And if we're lucky, they'll fail in calm conditions and they can just fail, which, that's capitalism, market economy. But if we're unlucky, they'll fail in more difficult circumstances, or the spillovers from them, the shock waves will be really worrying. And then the central banks will find themselves lending to shadow banks, and the governments will find themselves propping up shadow banks. And all of this is kind of written in the runes of the universe, if anything is, and therefore we should anticipate it, and therefore we need a policy on shadow banking. And I wasn't alone in this, but I gave a speech in that 2010, another one in 2012, discussed it in a paper. There was a Brookings conference to mark Ben Bernanke's retirement. The conference was at the beginning of 2014. This was the first thing I did after leaving office. Dan Tarullo gave speeches on the same thing. The point is not to take credit for it, because in a sense, it's so completely obvious that I don't think there's credit to go around. There's just a big question about why didn't the authorities do anything? And that be as it may, they need to do something now. And the LDI thing in London is a variant of that. The fact that they might want to use derivatives or repo a bit to enhance returns would have been fine. But if you're 100% lever and your counterparties can call for more collateral on notice, and you've invested in illiquid assets, well, then you're an explosive fund, not an ordinary pension fund. Whenever you hear anybody's levered, you want to hear how much, on what terms, and what have you bought? And those are standard questions which I absorbed from my bosses ages ago. I didn't, and are familiar to the best practitioners in the market. So, but I think an interesting thing about the LDI episode is, because it was associated with political stuff in the UK, and I think there's little excuse for what I'm going to say, other countries didn't take it seriously enough. They should have, financial policymakers elsewhere should have looked through the British politics and thought, my goodness, they've got over-levered illiquid pension funds. What have we got? And it turns out they've got some other things. And there'll be more. There'll be more. I mean, some of the crypto blow-ups, the more financial ones rather than the scandal ones, show that. And there will be more as interest rates normalize. I mean, of course, I haven't got the faintest idea where.
Yeah, but this will be a risk moving forward.
Yeah. And therefore, what you, I think, want to do as a policymaker is that you want, this isn't the easiest thing in the world to do, but nor is it impossible. You want to get people to quietly de-lever, quietly and carefully to de-lever.
Yeah, it'll be interesting to see if that happens. So, Paul, thank you so much for your time. We've covered so many topics. My last question is, what is one message you'd like people to take away from our conversation?
Oh, buy the book, Global Discord. I hope people find something of interest in it. I do think that whether or not they buy the book and read the book, I do think that your generation is going to live through completely different times from mine. We could take peaceful coexistence for granted, and even if peace is maintained, as I hope it is, I don't think you're going to be able to take it for granted.
Yeah, it's a great message. So you mentioned the book. I'm sure people buy that in all shops, I guess. And then do you have any other online presence?
Amazon is probably the best way of getting it. Or the publisher's website. It's not up to date with everything I've done in the book, but paultucker.me is my personal website.
Yeah, perfect. I'll pull that all in the description below. But thanks again for your time.
No, thank you. See you.
Thank you so much for listening, and if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.